Most traders enter the market believing that success comes from doing what feels natural, what feels comfortable, what feels emotionally normal. But after enough experience, traders slowly realize something very important. Normal behavior does not create trading profits. In fact, most normal human reactions destroy consistency in the market. And that is exactly what I want to talk about in this video. Trading psychology and why normal does not make profits. Because the market rewards behavior that often feels uncomfortable emotionally. Patience instead of impulsiveness. Discipline instead of excitement. Risk control instead of emotional gambling. Calm thinking instead of emotional reactions. And if you stay with me until the end of this video, you will understand why normal human emotions create losing behavior in trading, how profitable traders think differently, and how you can slowly train your mind to develop professional trading psychology.
And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, patience, and long-term consistency. Now let us begin with one important truth.
Human psychology was not designed for trading. This is extremely important to understand. The human brain naturally seeks comfort, safety, certainty, quick rewards, emotional protection. But the market operates differently. The market rewards patience. The market rewards uncertainty management. The market rewards emotional discipline. And because of this, normal emotional reactions often create bad trading decisions. Now let us go deeper. When a trader sees a losing trade, the normal emotional reaction is fear. The brain wants to escape pain quickly, so traders close trades too early emotionally, or they panic during temporary drawdowns. Now let us consider another situation. A trader experiences a winning streak. The normal emotional reaction is excitement. Overconfidence appears. Risk increases emotionally. Discipline slowly disappears. And eventually, emotional behavior destroys consistency. Now let us talk about another normal human reaction.
The need to always be active. Humans naturally feel uncomfortable doing nothing, especially in trading. Traders stare at charts for hours. Eventually, boredom appears. And emotionally, boredom creates pressure to take unnecessary trades. But profitable traders understand something important. Activity does not equal productivity. Sometimes the best trade is no trade. That sounds simple, but emotionally, it feels uncomfortable. Because patience is not emotionally natural for most people. Now let us talk about fear of missing out. This is another normal human emotion. When traders see a strong market move happening quickly, the brain immediately reacts emotionally. What if I miss the opportunity? What if the market runs without me? And suddenly, traders chase trades emotionally. Not because the setup is high quality, but because emotions became stronger than discipline. Professional traders think differently. They understand opportunities never stop existing in the market. They stay calm, patient, selective, and this emotional control protects consistency. Now let us talk about another important truth. The market constantly punishes emotional impulsiveness, impulsive entries, impulsive exits, impulsive risk increases, impulsive revenge trading. All of these behaviors feel emotionally normal in stressful moments, but profitable trading requires abnormal discipline. This is why profitable traders often behave differently from the crowd. If this video is helping you understand trading psychology more deeply, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move into another important lesson. Normal people want certainty.
But trading requires comfort with uncertainty. This is one of the hardest psychological shifts traders must develop. Most emotional traders desperately want confirmation before entering trades. They want perfect certainty, perfect confidence. But professional traders understand something important. No trade is guaranteed. Losses are normal. Uncertainty is normal. Trading is based on probabilities, not perfection. Once traders emotionally accept uncertainty, emotional pressure decreases significantly. Now let us talk about another normal emotional behavior: revenge. After losses, humans naturally want emotional recovery quickly. The brain wants to remove discomfort immediately. So, traders revenge trade. They force setups emotionally, increase risk emotionally, and usually create even larger losses. Professional traders think differently. They understand emotional recovery matters more than emotional reaction. They slow down after losses. They reset mentally.
They protect discipline before protecting profits. Now let us talk about another emotional trap: the need to be right. Humans naturally protect ego. Being wrong feels emotionally painful, so traders hold losing trades emotionally, avoid accepting mistakes, refuse to exit bad positions. But profitable traders think differently. They understand protecting capital matters more than protecting pride. This emotional maturity changes everything. Now let us talk about emotional excitement. Most people secretly want trading to feel exciting. Fast movement, constant action, adrenaline. But excitement usually creates emotional mistakes. Professional trading often feels boring, and this is difficult for emotional traders to accept, because emotionally, boring feels unproductive. But boring trading is often disciplined trading. Now let us move into real trading examples. Imagine a trader watching the market during a slow session. No clear setup exists. Nothing high quality appears. But emotionally, boredom starts growing. So the trader forces random trades, small impulsive entries, low quality setups, unnecessary risk. At the end of the day, emotional impatience created losses. Now imagine another trader in the same situation. They also feel boredom, but they stay patient. They wait calmly. They accept that no trade is sometimes the smartest decision. This emotional discipline protects their account. Now let us consider another situation. A trader enters a good setup. The trade moves slightly into profit. Immediately, fear appears. The trader closes early emotionally. Then the market continues moving exactly as planned. Now frustration appears. This happens because normal psychology wants quick emotional safety, but profitable traders allow probability to play out calmly. Now let us consider another example. A trader experiences several winning trades in a row. Emotionally, confidence becomes overconfidence. The trader increases risk, stops respecting rules, and eventually gives profits back emotionally. Now imagine a disciplined trader. They experience the same winning streak, but behavior stays stable. Same patience, same risk management, same discipline.
This emotional consistency creates long-term growth. Now let us talk about another important truth. Most traders are fighting themselves more than the market. The market simply reveals emotional weaknesses: impatience, fear, greed, ego, overconfidence. And until traders develop emotional awareness, consistency becomes difficult. Now let us talk about self-awareness. Self-awareness means noticing emotional patterns clearly, understanding what triggers fear, understanding what triggers greed, understanding what creates impulsive behavior. Because awareness creates emotional control. Most emotional traders react automatically. Professional traders observe themselves constantly. Now let us talk about routines. Routines reduce emotional randomness. Stable routines create stable behavior. Many profitable traders follow structured daily habits. Review charts calmly. Journal trades. Review emotional mistakes. Protect focus. These routines strengthen discipline over time.
Now let us talk about journaling. Journaling is one of the most powerful psychological tools in trading because journaling reveals emotional patterns. You begin noticing recurring emotional mistakes, recurring impulsive behavior, recurring psychological triggers. This awareness slowly improves discipline. Now let us move into mental frameworks that help traders think differently. The first framework is process over emotions. Focus on execution instead of emotional comfort. The second framework is long-term thinking. Judge yourself over months and years, not individual trades. The third framework is probability thinking. Accept uncertainty calmly. The fourth framework is emotional neutrality. Stay balanced during both wins and losses. Now let us talk about practical exercises that strengthen trading psychology. The first exercise is practicing intentional patience. Spend time observing the market without forcing entries. This strengthens emotional control. The second exercise is emotional journaling. Write down emotional reactions after every session: fear, greed, impatience, frustration. This builds awareness. The third exercise is reducing emotional pressure through smaller risk. Smaller risk creates calmer decisions. The fourth exercise is pausing before entries. Ask yourself honestly, am I following my process or reacting emotionally? The fifth exercise is reviewing trades calmly instead of emotionally. Look for lessons, not emotional self-criticism. Now let us talk about another important truth.
Profitable traders eventually become emotionally different from the crowd. They become calmer, more patient, less reactive, less impulsive, more disciplined. This emotional transformation changes trading completely. Now let us talk about emotional maturity. Emotional maturity means accepting uncertainty calmly, accepting losses calmly, accepting slow progress calmly. This emotional stability creates better decision-making. Now let us go even deeper. The market rewards people who can stay emotionally stable during pressure, during boredom, during uncertainty, during losing streaks, during winning streaks. And this emotional balance becomes one of the greatest advantages in trading. Now let us move toward the final message. Normal emotional behavior does not create profitable trading. Normal human reactions usually create impulsive behavior, fear-based decisions, greed-based decisions, emotion-driven mistakes.
But profitable traders slowly train themselves to think differently. They become more disciplined than emotional, more patient than impulsive, more process-focused than excitement-focused. And this psychological shift changes everything. Let me leave you with one final thought. The market does not reward comfort, it rewards emotional discipline. And the traders who succeed long-term are usually the traders who learned how to control themselves under pressure. They learned how to stay calm while others panic, how to wait while others chase, how to stay disciplined while others react emotionally. And if you continue strengthening your mindset, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.